Wall St. week ahead as earnings loom, investors weigh recession resilience. Traders work on the floor of the New York Stock Exchange (NYSE) in New York City, U.S., July 7, 2023. Reuters/Brendan McDermott. New York, July 7, Reuters. As second quarter earnings approach, investors are looking at beaten-down sectors which might gain ground regardless of whether the U.S. economy falls into recession this year. While the benchmark S&P 500, SPX, has gained nearly 15% year-to-date driven by a handful of mega-cap growth and technology names, some sectors have lagged, including the S&P 500 healthcare, which is down 4.7%. The financials sector is down 2%, while energy is nearly 9% lower. These unloved sectors are growing attractive to investors increasingly torn over whether a long-feared U.S. recession will ever materialize. Global fund managers increased their allocations to healthcare and banks by about 5 percentage points in June, while cutting holdings of popular recession plays such as cash and consumer staples companies, BofA Global said. Large asset managers such as BlackRock and Wells Fargo highlighted healthcare as a favored sector in their recent outlooks for the rest of the year. Some large banks have improved their U.S. economic outlooks, with Goldman Sachs cutting the chance of a recession within the next 12 months to 25% from 35%. The Commerce Department, meanwhile, increased its estimate for first quarter gross domestic product growth to a 2% annualized rate from its initial 1.3% estimate. Quincy Crosby, chief global strategist for LPL Financial, noted a tug-of-war in the market over the likelihood of a recession. But until we hear from companies that they are cutting their labor force, then we think that we will not have a dire earnings season and some of these lagging sectors will become more favorable, she said. The U.S. economy added the fewest jobs in 2.5 years in June, but persistently strong wage growth pointed to still tight labor market conditions, new data on Friday showed, all but ensuring the Federal Reserve will resume raising interest rates later this month. That will likely continue to weigh on stocks overall as borrowing costs increase. Overall, earnings in the S&P 500 are expected to fall 5.7% in the second quarter, largely due to declining margins, Refinitiv data showed. Reuters graphics. Despite that dim picture, cheap valuations and stable healthcare earnings make the sector increasingly attractive to invest in if the economy does slow in the second half, said Samir Somama, senior global market strategist for Wells Fargo Investment Institute. The healthcare sector trades at a forward price-to-earnings ratio of 17.6, well below the 20.1 ratio of the broad S&P 500. We think the Fed will do whatever it takes to get inflation back down close to 2%, and that's why we think we will see a Fed-induced recession in the coming months, he said.